So in this tutorial video, I go through a small section of my book, Confluence, Not Coincidence, where I talk about confluence of support and resistance zones on multiple timeframes and a very simple strategy to trade them. Check it out. So in my book, Confluence, Not Coincidence, one of the topics that I cover are multi-time frame support and resistance zones. When we get those overlaps from different time frames, giving us strong support or resistance. I'm going to talk about a simple strategy to trade that today. In chapter 8 of the book as well, I also talk about short-term swing trading. So I'm going to take that theme through this tuition video. So first of all, we're going to take Apple on the 30 minutes. So 30-minute time frame for me is 30 and 60 minute is where you get those short-term swings. So that could be a day, 2 days. In this case, we've got 1, 2, 3, 4 days, and then just around about two or 3 days there. So again, short-term swings, not necessarily carrying over the weekend, but there are opportunities there as well. But the main thing is we're going to be using NinjaTrader platform because we have our Expert Guardian zones, which are totally automated multi-time frame support and resistance zones. So I'm on the 30-minute time frame for Apple here. So the 30-minute zones, the native zones on any chart for us, for example, are yellow. The 60-minute zones are in pink. And then obviously we get in those overlaps, and we're going to talk about those confluences now. So we do project, when we're on 30, for example, we project 30, 60 daily and weekly, and you're going to see some of those later. So the next thing really is when we get that confluence of zones really, really strong. This is orange because we've got the pink overlap in the yellow. And we get a nice little short trade here. I mean, this was not a swing trade, but it was trading between the zones, and that's important. And I'm going to talk about the criteria on the next slide for that, the criteria for entry for this particular trade. So then we get a confluence of 60-minute zones. So this is two separate 60-minute zones overlapping, really, really strong sort of resistance and then support. So we look for a trade once we've broken through there, and then we would continue to carry that. So the stop for that would be below the zone or below a pivot, which actually just breaks that bottom side of that zone. So that's where the stop is, and that will come. We're going to talk about this particular trade on the next slide. So then we automatically should take profit at the next confluence zone, okay, or even at the next zone, even if there's no confluence, because we'll be trading between the zones. We get an opportunity when it does break through. So Apple gapped up at this stage here. Take the profit because you don't know what it's going to do. You don't know if it's going to turn around and actually hold that resistance. But we do break through. We get another long at this point here to trade to the next zone. Okay. So this is that one trade I want to talk about, and the main thing for me is fresh air. Okay, so this is the next zone above this. This is a 30-minute zone, and this is our confluence of 60-minute zones where they're overlapping. We've got fresh air. So what I do is I use a fib retracement. I'm going to put the stop just underneath this pivot here. I'm going to put the zero line at the top of that zone. So then I can work out my risk to reward. And I've only gone up to 400% here. So 1 to 4, 1 to 1.6, 1 to 161% is my minimum. This is a lot of fresh air. My entry, depending on the instrument, would be around the 382 sort of level on the fib extension there. That gives it there, and or sort of we look at candle closes and then opens for the next sort of trade. So that's the criteria. The main thing for me is if we've got fresh air between zones, there's a good trading opportunity there. There are other bits of software that we provide for things like confirmations and that. I just want to concentrate on this specific type of strategy using confluence of support and resistance. So this is BA, okay, another stock. Again, short-term swings on stocks are pretty good. This lasted into the third day, pretty standard, but got a lot of zones here, so I want to talk through those if you like. So what we have initially is a confluence of 30 and 60 minute zone. That's just reduced the size of my head here. So we've got a confluence of 30 and 60 minute zones down at the bottom here. We've got a confluence of 30, 60 minute and daily zones. You see the grey down at the bottom here and the grey up here, that's a daily zone. So BA is going into a massive resistance zone here. What I want to do is, first of all, is concentrate on this particular candle here where we took the trade. So this was the previous day's close. The next day we gapped down. We moved into this confluence zone and it rejected those lows, and I would say that was on high volume, and came up to close near the highs again. The next candle is our entry. Really, really strong trade. Lots of fresh air to the next zone. You know, risk to reward is about 1 to 2 there. Fantastic. And then obviously into that zone, that's when you'll take your profit. Very, very simple. Then we can see up here, actually, the purple's a confluence of weekly zones. There's got to be a really big catalyst. And I talk about catalysts in the book a lot. For a stock, if there's no big earnings catalyst, there's no big news, this stock is going to struggle to go through these dailies and weekly zones to push through that as resistance. So, and it failed, and it will fail 9.5 out of 10 when you've got no real catalyst, when you've got no confluence of news that will really push that through. Those that like to short stocks, however, would have had a fantastic trading opportunity at this point because it pushes back through that confluence of 30, 60 and daily. The stop for this short trade would, you know, where the big real confluences are here would just be above there. That's the entry. It comes all the way down to the next zone. Really, really strong trade there. So let's have a look at a Forex pair, because Forex are very tradable, swing trading. Usually those, again in this case, usually day and a half, 2 days, 3 days max on a Forex pair, because there's lots of economic data that comes out during the week that can really reset that behavior. So with stocks, you know, short-term swings probably can go up to 7 to 10 days. Really, for me, that's a short-term swing. But with Forex, you're looking 2-3 days max, because there's always going to be some data that comes out that resets behavior. So in this case here, we've got a confluence of 30 and 60 minute zones again at the top and the bottom. So we basically, the software's defined that operational landscape for Euro GBP in this particular case. And what we're looking for is, in this first instance, we come down to test this as support. The next candle we get here forms a bullish harami. There's no coincidence here. This is why we call it confluences. We're seeing a confluence of linear support and resistance zones, and the behavior of those two candles giving us that pattern of that bullish harami. Then there's a nice long all the way up here, because there's lots of fresh air. Okay, our risk to reward is 1 to 3 or something like that there. Really, really strong, good move. And take the profit into the next zone. Don't second guess what's going to happen at those zones. Wait for something to happen. And in this case, unlike the previous example on Apple, this case we found really good resistance and we came back down. So in this case, we had a nice bearish engulfing at this point here, which really started that momentum to come down. We came back up to test. So the stop would be above this confluence zone, remember. We came back up to test this, not just once, but twice, okay? Really, really strong. But eventually, it made it down to that support and resistance zone. Let's look at a Bitcoin example, okay? Bitcoin futures. Lots of volume coming through this at the moment, especially with the new Bitcoin ETF. And this is very, very tradable for futures traders. It's not cheap. The margin requirements are quite high, but this is very, very tradable. So we've got, in this case, I've gone to the 60-minute zone because I think 30 is just too small for Bitcoin futures at the moment. We need to be looking at the 60-minute for those short-term swings. So we've got a confluence of 60-minute zones. So remember, they were pink on the other ones, but now we've actually gone to the 6-minute time frame, the native time frame becomes yellow on the expat guardian zones. We got a confluence of daily at the top here as well, those two greys overlapping. We have a lot of fresh air, very, very important. We can see we've got a lot of consolidation in this confluence zone here, really strong until it breaks out. That's the trade. The risk to reward here is something like 1 to 1,000. I mean, it's a very small zone here, and lots of fresh air, and it goes all the way to that next zone here. We can see we had a big rejection here into that zone, and that's the time to take out the profit there. That's going nowhere except for back down. It's bouncing off that big daily zone. So again, just to reaffirm this, we're trading between the zones. So the next example is gold, and we're going to show you some losers in here as well. I'm not going to tell you why. I mean, that's for when people, you know, get the software and understand a little bit more about the confirmations. But what we have here is lots of confluence zones. We've got a confluence of 30-60, confluence of 30-60, and a confluence of 60. So we've really, the software has helped to define the operational landscape. I talk a lot about this in the book. The operational landscape is extremely important to be successful, whether you're day trading, scalping, swing trading, short-term swing trading. That operational landscape is really important, understanding where those confluences of linear support, but also I talk about non-linear support as well. So let's go through this. So there's a little, we looked for a little short here and it failed, it took us out at the stop. That's fine. There's no strategy that gives you 100% win rate. Absolutely not. Okay, we're looking for 80 plus win rate, and that's the strategy, and we follow the same rules every time. So then we get this nice break back through. So we came down, we break back through this 30 to 60 minute zone, and a nice trade all the way to the next confluence zone. Then we get another one. I mean, this risk reward is just on the edge of 1 to 1.6, but it was a good trade, probably in that 90 minutes. It was good, little trade. Then really we don't trade. There was no trades up here. We come back down through this same confluence zone, and we get a great short all the way down to this next confluence zone. Then we get a little loser. Okay, so we get that push through. Again, we're following the rules. We've got lots of fresh air. We're going to go. It went against us at that point. Later on, we formed some more confluence zones. Some new zones here were formed. And then we pushed through and had a great short trade there. So again, it's about following those same rules and entry requirements. So again, this is just a very, very short video to go through one of the subjects in my book, Confluence, Not Coincidence. So short-term swing trading between confluence, support and resistance zones. Very, very important that you understand the operational landscape of the instrument that you're trading, whether you're swing trading or day trading. You really need to understand that. Understanding where those confluence of linear support and resistance zones from different time frames, or even the same time frame, is very, very crucial. So check out the links below. We have the expat guardian zones for Ninja Trader, which basically does it all for you, takes them away, puts it on, and keeps those support and resistance zones on multiple time frames all the way up to weekly on the one chart.